China will do its best in order to prove, first of all, that they're not giving so lavish subsidies. That will be very difficult. And on the other side, they will also try to show the Europeans what would be the price to pay for that. Because so far China has not announced the retaliatory measures, but probably they will come, and in that case all the European countries will be capped to the calculators in order to see what they gain and what they lose by this.
Resilient, dynamic, and challenging, NIO's shares are down in pre-market trading after the European Union announced steep tariffs of up to 38.1% on Chinese electric vehicles. The European Union claims these vehicles benefit from unfair subsidies that harm European manufacturers. Despite this, NIO insisted on expanding in Europe and criticized the European Union's decision. The new tariffs will take effect in July. The China Passenger Car Association expected these tariffs. Its Secretary General, Cui Dongshu, believes they won't significantly impact most Chinese firms. Shares of other Chinese electric vehicle makers, including BYD, are also in decline. Can NIO's commitment and expansion plans overcome the European Union's tariff challenge? As of June 17, 2024, analysts on onvo predict that NIO's stock will rise to $6.14. This suggests a potential gain of about 38.91% based on their target price, showing how much the stock could increase according to their outlook. While there's currently a single buy rating, onvo often gathers opinions from multiple analysts to provide a more comprehensive view of NIO's future. Remember, analyst ratings are just part of the puzzle. It's crucial to do your own research, considering NIO's financial health, industry trends, and overall market conditions. Past performance isn't always a guide to the future, and even with an optimistic forecast, there's no guarantee NIO's stock will hit the predicted $6.14. Considering these factors, along with your findings, can help you decide if investing in NIO is the right move. Can NIO really reach the $6.14 target set by analysts? What's your take? Let us know. If you like this update, hit the like button and subscribe for more investing insights.
Exactly. How is this going to work politically, and does it mean that it's going to be challenging to get tariffs through, or rather to keep more Chinese EVs out?
You're absolutely right, because the very aim of the globalization was this one. It was to produce cheaper in China in order to preserve the cost of living in the United States and in the European Union. So everybody was happy up to a certain point.
Last month, the U.S. decided to quadruple tariffs on Chinese electric vehicles to 100%. Now, the European Union has classified NIO as a cooperating company, imposing an additional 21% duty on top of the current 10% import tax on eclectic vehicles. NIO confirmed today that it's closely monitoring the situation and will take actions that align with its business interests. Meanwhile, Geely and BYD will face additional duties of 20% and 17.4%, respectively. The European Union's tariff news coincided closely with NIO's first quarter revenue report of a little above $1 billion, falling short of estimates by approximately $70 million. Despite this, the company managed to post a smaller than expected loss per share. In May, JP Morgan upgraded NIO stock to neutral with a $5.40 price target, suggesting a 25% upside thanks to its battery-as-a-service strategy boosting sales. China has also introduced new stimulus measures aimed at bolstering automotive demand, particularly for new energy vehicles. These initiatives could potentially support NIO's shares, which have declined nearly 50% since the beginning of 2024. Moreover, according to recent media reports, NIO is shaking up its global operations with a significant reorganization. The company has created a primary department for global business development, tasked with driving its multi-brand and multi-region expansion efforts. This new department, led by Chen Chen, reports directly to NIO's co-founder and president, Qin Li Hong. NIO has yet to officially comment on these changes. Following this reorganization, NIO now has 8 specialized departments covering 6 key regions: the Business Development Department for the Middle East and North Africa, Asia, Latin America, and Oceania, Western Europe, Southern Europe, and Central, Eastern, and Northern Europe. Additionally, NIO established a Strategy and Planning Department and an Operations Support Center Department to enhance its global reach. Until now, NIO's overseas expansion primarily targeted Europe. They entered the Norwegian market in 2021 and expanded to Germany, the Netherlands, Denmark, and Sweden in 2022. This latest restructuring indicates that NIO is preparing to venture into new markets outside of Europe, signaling broader global ambitions.
Speaking of those tensions, China says it reserves the right to file a suit with the World Trade Organization over new tariffs that the EU plans to impose on Chinese imports of electric vehicles. Beijing has slammed the move as protectionist and is urging the bloc to correct its, quote, wrong practices. China warned that the tariffs not only harm its domestic EV industry, but also distorts auto production around the world, including in the European Union.
Furthermore, NIO has reacted by reorganizing its sales team, focusing on the Middle East, led by a new head who helped launch NIO in Europe in 2020. In May, NIO delivered 20,544 cars, bringing their 2024 total to 66,217, a 51% increase from 2023. Other Chinese electric vehicle makers, including Xpeng and BYD, are also seeing stock drops due to the European Union tariffs. Tesla might also feel the impact since many of its cars are made in Shanghai. The European Union's tariffs follow an investigation into China's electric vehicle supply chain, which the EU accused of unfair subsidies. China hit back, accusing Europe of weaponizing economic and trade issues. Europe's auto sector employs around 13 million people. China might retaliate by increasing tariffs on European gas-powered imports, which could heavily affect Volkswagen, given its production presence in China. Moving forward, let's analyze the NIO stock more. The stock market's ever-shifting landscape can be daunting, but by delving into specific metrics, we can gain valuable insights into investor sentiment. Trade statistics focus on NIO's recent trading activity as of June 17, 2024. Specifically its volume and put or call ratio over the past 5 days. By dissecting this data, we can begin to understand the current mood surrounding NIO stock. Volume, the total number of shares traded each day, acts as a key indicator of market interest. The information provides a snapshot of NIO's trading activity over 5 days. If December 22, 2023 shows a notable increase in trading volume, it could indicate alignment with a significant news release or a broader market event that directly influenced NIO's stock performance. Analyzing such spikes helps in understanding the underlying factors driving investor sentiment and market dynamics. Furthermore, comparing the volume across different days helps identify significant fluctuations. If a particular day exhibits a substantial increase or decrease in volume compared to the average, it's worth investigating further. This could potentially signal news events or changes in investor sentiment that might not be readily apparent at first glance. Moving beyond volume, the put or call ratio offers a glimpse into the sentiment surrounding options trading for NIO stock. Options contracts grant the holder the right, but not the obligation, to buy or sell the underlying stock at a specific price by a certain date. By analyzing this ratio, we can gauge whether options traders are anticipating a rise or fall in the stock price. A ratio greater than 1 suggests more put options are being traded, potentially indicating a bearish sentiment. These options traders might be betting on a decline in NIO's stock price. Conversely, a ratio less than 1 suggests more call options are being traded, potentially signaling a bullish sentiment. Options traders holding call options are essentially betting that the stock price will increase. On the other hand, for the volatility of NIO stock as of June 17, 2024, the implied volatility, displayed on the left side of the graph, is a statistical measure derived from option prices. It reflects the market's expectation of how volatile a stock's price will be in the coming year. The information showcases implied volatility for 4 points in time. For instance, the value on December 22, 2023 suggests the market anticipated substantial price fluctuations for NIO's stock in the following year. This could be due to various factors, such as upcoming product launches, potential changes in government regulations, or overall market uncertainty. By comparing the implied volatility across the different dates, we can see if the market's perception of NIO's stock risk has changed over time. Historical volatility, on the other hand, displayed on the right side of the graph, measures the actual fluctuations of a stock's price over a specific past period. It is often calculated as the standard deviation of a stock's return over a period of time. The information provided historical value for each date provides a historical perspective on how volatile NIO's stock price has been. For example, a high HV on a particular date might indicate a period of significant price swings for NIO stock. It's important to acknowledge that the volatility analysis and trade stats we have provided only capture a limited time frame. You should analyze NIO's market for a longer period to gain a more comprehensive understanding of its stock volatility. Additionally, consider factors that might influence future volatility and trading statistics, such as upcoming earnings reports, product launches, or potential changes in regulations. Remember, this information shouldn't be considered financial advice, and it's crucial to conduct thorough research before making any investment decisions. NIO is facing tough hurdles with the European Union's new tariffs on Chinese electric vehicles, which have caused its stock to drop before market hours. Despite this setback, NIO remains focused on expanding in Europe and elsewhere while criticizing the European Union's decision and preparing for the tariffs starting in July. Analysts predict that NIO's stock could hit $6.14, suggesting potential growth, but investor opinions vary. NIO's restructuring and global expansion efforts aim to minimize tariff impacts and strengthen its global presence. The analysis of volatility and options trading shows varying investor sentiment influenced by regulatory changes and market conditions. NIO's ability to navigate these challenges will be critical for its future performance. NIO's determination to expand in Europe despite tariffs shows resilience, but success will hinge on how well it manages regulatory hurdles and stays competitive. Investors should watch closely how NIO executes its plans in a changing trade environment to gauge its ability to handle European Union tariffs effectively. Our question here is, will NIO's strategic adjustments and resilience be enough to weather the storm of European Union tariffs and sustain its global expansion plans? Share your insights in the comments below. If you enjoyed this video, you may also like our hand-picked, action-packed newsletter about NIO. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.